One of 5 sessions we'll be doing on this work. Really excited. Like I said, readiness assessment, governance and leadership, strategy, risk management, metrics, and targets. This is on the back of a research that we've been doing in the 4 pillars of the ASSB. To begin with, like I said, if you want to look at all the sessions, feel free to scan that QR code using your phone. We'll send the links afterwards, but you'll be able to join everything from now on. Before we start, feel free to use the chat box, which you already are doing. Use the Q&A if you want to. Raise your hands if needed. And by the way, we do this in Zoom, but if you ever want to change platforms or Google Meet, do let us know to see what's more helpful for you. And we're also playing around with the idea of creating a LinkedIn group or a WhatsApp chat to have everyone involved, being able to collaborate and share questions and answers more easily. I would love to get your opinion on that because we're seeing a lot of value in the communities that we're building behind the scenes, and we're answering a lot of the same questions, and maybe we can centralize that information for free for everyone. That's kind of the objective, is that we do this as a team when it's needed. At the moment, we have about 50 people here in the webinar, so it's a lot of information sharing, and maybe it's super valuable to get that going. Finally, there's a mix of organizations who have to report and consultants who want to support those organizations. While I'm addressing these points, I'm going to maybe pinpoint to the 2 different audiences how they can use that information accordingly. Today's agenda: our research report on SSB, looking at the SSB criteria and the 4 pillars that sometimes people just think it's about emissions, but there's more to that. Everything on a readiness assessment, the core focus of the session, and of course Q&A at any point, but also at the end. So feel free to participate. Francesca and Maka can answer your questions in the chat. Our research report that we are about to publish very shortly, you still have time to participate. Your readiness assessment, if you want to and you complete that, can contribute to the research. So I really look forward to everyone in this room to amplify the message. But so far, we actually went and talked with 62 organizations, including group 1 and 3 companies, as well as consultants. And we asked them to complete either an interview or answer a readiness assessment that we have. And we've started servicing that data that has been really helpful to shape these sessions. One is how ready they are to disclose on the bottom left. Are they doing the first steps? Are they underway? Are they integrated, or are they ready to disclose? The fact is that not everyone is ready, and of course there's different groups, but what we saw is that everyone had a tendency to have oversight or undersight in some of key areas. For example, governance was lacking behind, but strategy was actually the critical area that most companies felt that they weren't ready to report on. Most importantly, everyone mentioned technical knowledge as an area of concern, and then we also had costs, reputational risks, and compliance uncertainty as things that surfaced in the interviews. And everyone, 100% of the people that we've interviewed, mentioned that board engagement or director engagement has been one of the most challenging things, but also a critical success factor in getting reporting underway. So if you are a consultant, think about how can you communicate directly with the board or upskill that board. If you are leading an organization, think about your training packs, think about your time with group CEOs and the board itself on how you can communicate progress over time. Most importantly, most are looking to engage an external consultant to help with the disclosures effort. Not everyone can do it by themselves, and we have the consulting piece on one side, and of course the assurance or the audit in the other. So really inside, very early stage draft report, but we'll be putting this out very soon this month. But if you still want to contribute with your data, please free to do so. Now, quick review on who has to report. Different groups. The first one is group 1, which is the people who are actually now doing the work and looking to communicate with the auditors and with the consultants to get this show on the road. And we have the lagging group 2 and 3 companies. I'm not going to spend too much time in here because by the time you've come to this workshop and you've been communicating and hearing things from Etnada, I'd imagine that you are aware of these groups. If you're not, feel free to refer to this slide. We'll share them around afterwards, but this kind of defines who has to do what and when. I'm just going to see if I can check the chat with any questions. Awesome. We'll get a copy, yes, David, for sure. Teams meeting group. And feel free to then answer any questions at the end as well. I'll continue. Feel free to interrupt at any point. Key areas that after so many conversations, it is not clear, and I think it's one of the key things here as you are a consultant or within a company. There's two new standards. One is voluntary, one is mandatory. One relates to climate, and one relates to sustainability. At the moment, the only mandatory standard is the climate standard that relates to climate metrics, climate-related financial disclosures. The sustainability one, which is more high level, it is voluntary, and the S2 standard, the climate one, is a standalone. So you can just use that one. This is really important as you going and look at all of your ESG, you can now put things into buckets of voluntary and mandatory. One thing that's also important is that disclosure within the standards are easy to a sense of what you need to disclose, but what is important to understand is your ambition level. How do you want to be compared against your peers, especially if it's going to be a public report. This is just to kind of make that point of the focus now is on climate, where sustainability sits at a low level in the sense of things that you can incorporate or not into your disclosures. There is more than emissions, as you probably know by now. Metrics and targets is where emissions measurements fall under, but there are four pieces to this puzzle: governance, strategy, risk management, metrics and targets. A readiness assessment covers at a high level four of those. And what you saw there in the research was that strategy and governance is actually falling behind in terms of how ready people feel compared to metrics and targets. That is really important to understand that the things about getting your policies, your processes, drawing out the strategy, looking at your risk is shown to be harder to do or implement or having a technical knowledge compared to metrics and targets. All right. Any questions on this, please do let me know, because it's really key to understand that there is more than just the metrics and targets and more than greenhouse emissions to your disclosures. Another things that are helpful to understand is things like materiality scenario analysis or climate scenario analysis are really key things of deliverables in this process. So if you are a consultant and trying to help a company, think about if you can actually provide assistance in areas like this. Because by speaking with the companies, we know that doing a climate scenario is shown to be tricky, looking at physical risks, transition risks, which we'll deep dive into the next sessions and actually get our hands on and do them. It's proven to be really challenging and difficult. So this is, of course, the summary, and I'll show some scary screenshots of what actually happens behind the scenes. But just have an understanding that there's four pillars, and within those pillars, there's a lot of things that you can help a company, or that the company, the CFO, will need to sign off on. The other thing is that not everything is equal under the law in a sense. There's different assurance pathways, which means for the first year of your group disclosing, things like scenario analysis, transition plans, and risk management do not need to be assured. Now, one thing to understand is they still need to be disclosed. They just don't need to be assured. So when it comes to your audit phase and how much you're preparing this data in the things behind the scenes, not everything is equal. So think not just about the outcomes of what's going to be in a public report, but everything that supports that data or those conclusions. We'll deep dive again into the next sessions on the particular topics as you go to the four pillars, but just understand that your emissions are just as important as the process you follow and the decisions you made to get to those emissions. Your strategy is only as important as you writing down the methodology that you took, who was in the room, which sessions, which workshops to get that outcome because that's what's going to be audited. So really kind of important to look at the assurance pathway as we do this. All right, now to the core session, and I'm trying to keep this as brief as possible because it's just kind of like the initial stage. We are looking into completing a readiness assessment and what it is and who needs to be in the room to complete that and how you can use it very easily to your benefits. What is it? What is it? Just a map or analysis of the current preparedness level of a company. Now, we chose to do a readiness assessment against mandatory climate reporting, against that second standard on climate, the ASSP S2, but you could prepare one for anything that you deem important in your company. So I have a question here in the chat, which I might answer right now. When you say audited by who is the audience? So as you prepare these disclosures, you'll have to have a third party look at these decisions and provide assurance, sign off on what you're going to put out to your users in that case. So imagine you are a group one company doing this exercise, preparing your report. Before you publish this information, you actually need to take all the methods, all the processes, all the results, and give it to an auditor to analyze them and to feel that confident they had that limited assurance on the number that you're putting out. They're not self-reported, they need a third party to review this. The audience of that report or the users depends if you're a public company or not, but it will be the stakeholders you deem material, which might be your clients, your users, your investors, and so forth. I hope that answers your question, but I'm happy to deep dive a bit more into the auditing phase if needed. Now, this is what a readiness assessment looks like. It's very simple, only a few questions, and it sits on top of this, which is all the paragraphs within the standard that have been extracted that your company will have to provide answers and reasoning for, depending on the level of assurance. You can go through this with your team and answer yes or no to which of the sections to this. You can assign an owner, you can say if it's in progress, if you're confident or not, and this will give you a score to kind of deep down, to deep dive into the things that you might be falling behind. When we go with this with companies, clients, or people in our network, what you would find by doing the you might look at your governance and say, hey, actually, we don't have a process on that. Or we haven't actually assigned, a good example is an upskilling pathway for the people that have oversight on climate. Or our board doesn't have any remuneration associated to climate targets. Things that will need to be disclosed and completed, that this gives you the chance of surface that. So if you ever want to engage an external party, you at least know what kind of help you are requesting from them. Because one of the biggest mistakes you can do is just trying to get everyone to do the whole piece and first not understanding your readiness level and the things that you need most help with, because your company might be already doing things that are really helpful or putting you on the right path for disclosures. Again, this is not fully comprehensive because there's a lot of paragraphs within the standard, but by doing this you can start mapping or getting a level of understanding before you go and you do a full gap analysis on all your requirements. So if you're a consultant, this might be a fantastic tool of clients, and if you are on the client side, understand, can I share this with the wider team? Can I bring my procurement, my CFO, to then pinpoint and survey these things for you? I have a question, how is it be scored? At the moment, we have 1 point for each of the questions, and it's divided by the section. So we can surface within the section how you're falling behind, in that score, but also overall where that puts you in terms of readiness level, which I will kind of touch on in a second. When it comes to the full disclosure, and this is something that's inside the NetNada platform, you can actually map all the paragraphs, all the requirements, and start attaching the policies, the results, the evidence, the owner, the date, the review time on each of the things that you'll have to extract to give to your auditor. So think about doing project management for your disclosures inside a centralized place that you can start attaching evidence and progress towards each paragraph. Who should be in the room? And this, of course, varies between company and company. But from our conversations, we kind of touched on from our experience that if you manage to get everyone that I've listed here into the room, you will have a more comprehensive readiness assessment. But most importantly, you also will then be able to incorporate, bring them on a journey to complete the full disclosure. 1 second. Feel free to ask any questions as well on this of who are the most critical people. Can you actually get everyone in the room? How much can you do this yourself? A good example is you might have your sustainability team leading this project, right? Trying to do everything themselves. But what we found out is the earlier you can get and engage the wider team, the easier it will be. Secondly, your CFO, right, your finance team will be the ones signing off on this information, right? And this is about climate-related financial disclosures. So the involvement of your finance is very important, and of course your executive leadership, your board, your directors, also very, very important because they will bring that governance piece into place. And so they'll need to get upskilled, they'll need to be trained, and need to show evidence for that. When it comes to the risk team, it's going to be super important as well, as we're going to look into the next sessions, that when you're going to go do risk, you'll have to agree on what risk is, and you'll need contributions from everyone in the team to say, hey, this is a risk or not. Is this a risk or not? Are we going to make this material? How does this apply? And so forth. Another question we have here, didn't quite understand between the smaller list and the larger list. So this is a high-level analysis of the 4 pillars of the SSP. It's important to know that the document of the SSP S2 compromises a lot of paragraphs, and all of them need to be answered. And that list is actually quite long. Of course, if you go through all of this, you're actually doing your disclosure. While if you're doing this, you're just doing a high-level readiness assessment to find critical areas inside your business. If you were to actually sit down and do all of the requirements, what you're actually doing is doing a gap analysis and completing your disclosures as you do so. This might not be possible in your first engagement with your board or your first engagement with a consultant. So you need to strip that down, streamline it into an area that at least you can start attributing or allocating resources to get the process underway. So if you find the critical stakeholders in a part of risk management, you can then assign them the correct area within the full disclosure to get going and start completed. This is a lot of things to do. It's about 200 plus paragraphs that you need to understand that map to each other. And that's why the readiness assessment is a bit shrunk down in high level. Another question here, CFO will sign off if your entity is the Australian arm of a global company whose board executives sit overseas. Does this mean whether they have oversight of climate-related RNOs in general relating? Okay, so I'm going to answer the question at the end, so I have a bit more time to read it. But my understanding, yeah, I'll answer at the end, Hannah. So sorry about that. I'll just continue and I'll come back to it. All right. Key areas to assess in your organization that are not directly related to the assessment is your data collection and reporting systems. You're going to have to be collecting a lot of data, and this can be done offline, especially it can be done using new tools, but also looking at your existing tools to kind of position where the data might be. So a good example is, where do all your policies live inside your organization? If it's just a Google Drive, that is fine, but you just need to know where they are because you need to surface them or save new ones into that same database. Where does your risk register lives? You're going to be able to surface that risk already. Have you done a materiality assessment? Do you have risks mapped to your company? If not, are you going to incorporate a new system that helps you build that risk and the likelihood on the climate scenario analysis. That's just an example of things that you look at data collection. It's not only about emissions, there's other things that you'll need to be able to document and save. Governance and leadership, right? How do you structure governance under climate? At the moment, sometimes we never thought about governance in climate. This is the first time people are looking at it, even at larger companies. And this is about structuring that organization to make sure that it's like direct responsibles for different areas of the disclosures and your strategy. And of course, ensure that top management and board members are aligned. Important for that is, part of that governance is having remuneration associated to this, is having governance, and of course, having sign off and people getting upskilled. So really important to map that out. And of course, the risk management framework. This is one of the key areas, is understanding, your climate risk, looking at physical risk, transition risk, and opportunity, and having a place to save that, to do those exercises, to prioritize which risk you're going to include in your disclosures is really key. So looking at these three things to begin with as you move over your readiness assessment is really important. And this could be just simple questions you are asking your team. How consistent are the disclosures of Group 1 companies in similar industries? The disclosures are very similar in terms of what's going to be disclosed. What will be different, and it will map by ambition level, and of course by industry, is things like your risk. The risk that you select if you are a logistics company versus if you are a financial institution really varies, right? Financial institution might look at your financed emissions, where are you allocating money, what are people doing with the money, are they households, businesses? If businesses, which area are they exposed? If you look at a logistics company, you might look at cost of fuel as an example. You might look at the cost of electrifying your fleet as a transition and opportunity. You might look at talent. You might look at the areas, time on the road, etc. Different parts of your logistics route that you can do. So it really depends on your industry, and that's where that workshop, that materiality comes in. Same thing when you look at strategy. Do you want to be not just about being net zero by a certain date, but how are you going to deal with these risks? Are you making them short term and you want to act them in the next 2 years, or is it going to take 10 years? Those timeframes are set by the companies independently. There's no right or wrong way to do it. It's just how you're going to set your ambition level to report your companies. So the criteria is the same for all Group 1 companies. What is going to change if it's material? And once you deem materiality for certain things, you can then allocate the appropriate risk and strategy onto them. So very similar, but then the risk will change. For the data collection, right? GHG reporting and climate risk, what kind of evidence do you have to show accuracy of the data? So for GHG, your inventory, your carbon emissions inventory, accuracy of data will come down to the methodology you followed. So not just going ahead and measuring it by yourself with things that you have available, but actually documenting things like where are your boundaries, which emission factors, the quality of the data is going to be spend-based, activity-based. Once you map that out, you can just go ahead and do it. But the important piece here is to document that methodology in that process. So it's not about accuracy, it's about transparency on how you do that, right? Because then if you follow that method, it doesn't matter if you use spend-based or activity-based, it was documented and therefore is going to be able to be audited. When it comes to climate risk, Australia, an Australian company already has a lot of physical risks mapped out. What you need to document is your decision that you've made to understand the exposure to those risks. As long as you document that, what you pick and what you don't pick, it's irrelevant to a degree. What is important is that those decisions were made in a comprehensive, knowledgeable manner. They've been documented, and therefore a company has picked a risk to go onto their disclosures. What kind of upskilling is important? I want to touch on that, but that upskilling is more related to which areas you kind of have deemed critical in your readiness assessment, because then you might have to deep dive into, okay, do you have to upskill the board? Do you have to upskill your finance team, your procurement team, your risk team, and so forth? or you have to outsource that information. I'm just going to continue before I go back to Eugene and Poppy. So give me a second. Conscious of time. All right, perfect. Maka and Francesca, feel free to keep me on time and moving on when needed. Like I said, the engaging the stakeholders comes across as a pillar to these steps, but I'm just surfacing three very easy steps to start doing that. Like I said, review current reporting practices. If you already do a report, you have the right data. Is that data reliable? Are you meeting parts of the compliance already? When you're trying to understand the standard, familiarize yourself, spend time reading through resources or looking at the standard itself, and identify which things are mandatory and which things are voluntary, because it will help you guide your decision. And be aware of any deadlines, deadlines to report for group 1, group 2, and group 3, and also any particular things within your industry that you might already, kill two birds with one stone once you do them. And of course, evaluate your resources. Have a look at things that you already have in place, or tools that can be adapted, or resources that you can reuse to get the process going. And at every point, while you map this timeline, and I'll show you in the next sessions what the timeline might look like, have a look at who you have to engage at different points to do your materiality, to do your risk, to do your strategy, to do your reporting, and so forth. When it comes to different levels of the output of the readiness assessment, they go into 6 brackets. This is a holistic view, but more important than the levels of that final outcome, what I believe is super insightful as you do that is understand which areas you're falling behind or you're not most comfortable in or ready in, besides the um, overall mapping of what's in there. Another thing as well is, as you gather this information, don't think just because you are still inactive or still at level 2 that all it's lost. It's about when do you want to achieve these things, but also understand that within each readiness assessment, there's an opportunity to explore and to tell a story of your journey and how you are going underway in that sense. All right. So I'm going to go back now to the question of Christina. What kinds of upskilling is important? Like I said, it really depends where you're falling, but also depending on which areas are being most critical, but also looking at your team composition. Do you have already a risk professional that can take on this work? Do you have someone who's really, in touch with the board and can start doing the governance piece with them? And based on that information, if you're leading the project, you can then suggest different upskilling areas or external parties to engage with. Now to Eugene's question, what are the requirements for reporting tools to comply? There's no particular requirements on the tools. One thing that I suggest, depending on like what the tool is actually doing. So I'll start with example of like greenhouse protocol, right? Looking about emissions measurement to do your inventory. Think about, is that tool a black box where you cannot understand how calculations were done? Or can you extract the information to be audited? So that's a nice check. Does the tool align with certain methodologies? Do they have exposure to all the emission factors that that your organization might need to use? For example, if you have a logistics company, they would have access to the correct fuel emissions or truck types if you're just going to use kilometers and so forth. And if so, you can then de-risk that tool and go ahead. Think more about, can you look at the pieces of the puzzle inside those tools and can you extract that information? Because that's what's going to be needed to be audited. And secondly, speak with the team of that tool and understand, are they going to build new stuff they're going to help your company or your companies or your consultancy do better work? A good example is, do they just do emission measurements, or they actually incorporate the mandatory standards? Do they have more than one, right? Do they allow you to do project management? Do they also have risk analysis inside those tools? And you can then make the decisions of, do I want everything in one place? Do I want to separate, and so forth? So there's not really any requirements. It's just about being comfortable that the team can have an output that allows it to be audited inside the tool. Eugene, feel free to ask any more questions on that. So don't worry about that. Looking at Poppy's question, the company I work for does not fall in any of the three mandatory categories. However, we do supply to them. So if you haven't, if you don't fall, so to restate that question, right? The company does not fall inside the group, right? And if you haven't been asked about the information, you have two options. You either don't do anything and it's business as usual, and that's fine. You want to start this process um, when time uh, when time is needed, or you get your first request, or you look at, can you start differentiating your organization and be outward towards these initiatives. Now, don't always think about it's just a marketing effort. Think about doing this would actually improve how your company is going to prepare around climate change or a change in climate, right? So if you are setting up governance processes, if you're looking at risk is going to inform the strategy of your company, and that's why the climate related financial disclosures are really helpful, is because you can actually make strategic decisions for your company when you look at transition and opportunities that are going to help position yourself in the market more than just answering a request from an organization. Bobby, I hope that answers your question. So it's not about we haven't been asked for the information. Think about the benefits of doing this exercise and doing it with time as you go. So, Jess, I know it's 10 minutes left, but I'm gonna want to make sure that we kind of wrap up early, give people back their lunch, and get the time ready for the next sessions. Also, Jess, if you can do any of the polls in terms of the groups in the webinars and the type of businesses, that will be fantastic. Going to the end before we then open to more questions, and please, if you do so, or Chess, if I miss something, please put it in the chat. But please do ask any more questions as we now get to the end, and I can answer them with a bit more time. Tools that we offer that you can use to make your life easier as an organization. We're going to share the workbook and the readiness assessment with everyone. We have a web form available, and the output is a spreadsheet that you can then use and modify and make your own. So I definitely suggest that you complete the online forms. You can then use the workbook. It's super valuable. If you're a consultant, you can then share this with your clients, which is fantastic for work. If your organization is going to help you have a clean slate of what it's needed. So you're going to do the survey if you can, and then you can actually use the workbook, which is really helpful to kind of map that. The other thing is we have a roadmap that, depending if you're a group one, group two, or group three company, you can start looking at what would it actually look like if you were to do the different stages of reporting and how things combine into the other. And the last thing that we have, which is not here, is that screenshot that I showed you, which is all the paragraphs of SSB in a place that you can actually use and start making progress. So if you are within a group one and two company, definitely do this. If you haven't done so, do them. If you already done it, just look at consolidating, all this information. Again, this is things that normally people charge for, but I believe that it is more valuable to keep the information, have a go at doing it, find the pain points, and then seek help if you need it. Just because that as you prepare and you do this internally, I think we believe it's more valuable. It's such complex work in different pieces that you can then put this into a tool if needed to do so. And the other thing is that information sharing. The only reason we can prepare these tools is because 60 people have given their time to complete the readiness assessment, to do the interviews. And by doing that, you can create better material, better tools. Doesn't matter if it's just our technology as a platform, but also these Excel spreadsheets that sometimes really help out to help do that work. And it works at a consultant level, which we have a lot of partners who do that, or inside an organization to help do that work. So that's kind of like the end of of what we have, I also want to, in terms of the Q&A and the resources that we have available, is that we have this 5 parts webinar, right? Series on mandatory reporting. We have our academy, which is, we have 4 courses now in the academy, which are free and self-paced, which means you can actually do a course on mandatory reporting, very high level. We can do one on materiality, and you can do one on science-based targets at the moment. Your own time with quizzes and so forth. We have our software tool, which you can use, and then we have these resources and work templates and so forth. We're always looking to build more. So if you have any questions, for example, presentation to the board, and you need a template, whatever it might be, just reach out to us, and we're happy to help. And yes, Chess is going to send this across to everyone. Does anyone have any other questions or any of these topics, the levels, the full disclosure, the 4 pillars, and so forth? Let me see if I can actually do the polls. Polls and quizzes. All right, I'm gonna just launch. See if I can. All right, I've launched a poll for the learning group. If everyone can reply to that, if you were to do one, what do you prefer? That'll be fantastic. Thank you for all the responses. This is lovely, and thank you, Chess, for reminding me. Awesome. I think we have a winner. All right, 80% of you replied. 71%. I'm gonna bring this back to the top. All right, perfect. Thank you so much. And I'm gonna launch just another poll if you can, which is here. If you are an organization or a consultant that wants to help their organization, so we can better map the content along for the next sessions. Awesome. You are all legends. So with that in mind, that was a quick response. I just want to see if there's any more questions. Where you assign a score to your assessment, we'll do it directly in the. Once you complete the survey, we'll actually send you the worksheet with the results, so be able to play around with that. Thank you so much for completing the poll. Awesome. So the last thing is, for the next section, we'll send an email. If we want this to make collaborative, where we can actually see each other's faces, we can do that instead of just being me talking to you, because I believe collaboration is important. So if you want to go off the chat to actually have a conversation, we can do that for the next sessions. And feel free to invite your colleagues and anyone else as we increase the numbers and we try to do a good cohort of people answering these questions. In the meantime, for the next sessions, which are going to be happening in 2 weeks, we'll send information in the meantime. Hopefully, we can do the quiz, the assessment, and we can improve on the material as we deep dive into the first pillar, which is going to be governance, and is one of the most challenging pillars of reporting on ASSP. All right, Chess, can you just put the link to the we'll send afterwards to the webinar in the chat, but that's okay. Any other questions from anyone? Perfect. Thank you so much, team. Thank you, everyone. You have 15 minutes of your time. Appreciate everyone that comes in and contributes to our community. Have a fantastic lunch and a fantastic afternoon.